Welcome to your weekend market intelligence brief for primary. I'm Matt Buckley, call sign Wiz. Folks, after every week, we're going to start knocking out a debrief of where our positions currently are in our model portfolios and just do an overall how goes it with the market and how we're making out with our primary model portfolio. Couldn't be more fired up to be back in the trading cockpit, and things are going really well. So let's get right to it. Let's take a look at our virtual Trade Monster trading platform. Folks, if you need to open a free paper trading account, go to our strategic partner Trade Monster's website. You can go to trademonster.com/TGO. Great rates, great tools, as you're about to see if you're unfamiliar with the platform. Know John and Pete Najarian really well. Great guys, great platform. If you're trading options, you should really be using a platform that's built from the ground up for options traders, not some huge behemoth, brokerage that just kind of bolted options on as an afterthought. So let's get right to it. How's our altimeter looking? How's the VIX? That's our main altimeter for how volatility is looking in the market. And, of course, that impacts options premiums. Past 5-day radar, we had a gap up, Thursday on that market pullback. But then by Friday, the market realized the world isn't going to end, and we're back into the 15s. I mean, as low as, the mid-14s. Folks, this is just absolutely insane. I'm telling you, this is insane. Look at what's going on in volatility. There's your 20-day radar, 6-month radar, and then let's take a look at the 1-year radar. We haven't plumbed these depths down to these depths since July of last year. Vol is cheap, you buy it. Vol's expensive, you sell it. So that's a quick look at our radar, and this gives you an idea. S&P downgrade of credit, Greece, all sorts of train wrecks the past year. That anybody really think any of this is going to not happen again? We lost our credit rating, obviously, but we're still getting huge in debt. You think Greece is going to be fine? You think Israel's not going to attack Iran? You think volatility is going to stay down here forever? This is when a wise traders get long volatility. And we'll talk about that with some of our positions we have right now in our model portfolio. Let's take a look at currently what we have. We have this Amazon bull put spread. It's currently up 72% in about 2.5 weeks. We love it. Amazon's still doing good. We're probably going to let this one fly all the way into impact and let it expire worthless there. About a 92% chance of that happening, of bringing in the full credit of $1,700 into our model portfolio. Moving on, Bank of America diagonal we put on about a week and a half ago. Love this trade still. This is long-term bullish on the financials. As we talked about, the financials lead us out of recessions. And Bank of America, hell, just by the name, has got to be one of the lead aircraft carriers in bringing us out of that. But we're bearish on the front months, right? We sell those upside calls to help finance that deep in the money downrange call purchase. So really not in too much danger here. Still like this trade. Let's take a look at the chart real quick, because Bank of America has been flirting with the $10 level of our short strike, but really wouldn't worry about that. Let's bring in our radar to about 20 days. As you can see, here's the support level we talked about. That's why we bought those deep in the money Jan 13 calls. They had about an 80 delta, right? Remember talking about that? And now we're hitting, it's scraping right along the 10 ceiling. So the main threat to success of this trade is earnings that come out before expiration. It could spike through this 10. It kind of sucks a little bit. We'd have to buy those calls we sold back. But guess what? We're holding some serious delta long calls down the road that are going to help ease the pain off of that. So I still like the Bank of America trade. It's up 22% since we put it on about a week and a half ago, 2 weeks ago. So that puts a smile on my face. The USO double vertical that we put out this week. Bullish on oil. We talked about Israel-Iran conflict. We talked about the summer driving season and AAA coming out and saying gas prices are going to go through the roof for the summer travel season. So we still like this one. It's a trade on afterburner, though, folks. Don't remember that. It is a June 33-36 bull put spread, and layered on top of that is a bull call spread, the 43-46. So And again, that's why it's called a double vertical, just stacked right on top of each other. It's a very bullish trade on oil. We're going to keep a tight rein on this. We're not going to let this get down towards that bull put spread that we sold and turn this into a loser. So I'm going to keep a tight leash on that in our paper trading account. And then finally, our VXX diagonal. This was the trade we covered in our primary trade brief last Tuesday. That is really bullish on volatility, folks. Downrange. We're looking at a Jan 13.25. We're looking at a Jan 13.15 deep in the money call, and then selling a front month, selling the April 25 call to help finance it. And that 25 call, obviously, you all saw what volatility's been doing recently. Not really. I think that 25. This is why we put it in, is because we kind of saw that spike. But if you're not in this trade in one of your virtual trading accounts, you could still buy that deep in the money 15 call out there in January 13 and sell an even closer strike because volatility really is taking a breather here. So that's always a potential adjustment, tactical adjustment to this VXX trade. I like where it is right now. This is perfect. That front month call that we have, these 25s will expire worthless, and guess what we'll do? We'll pull in our calls for May and sell a closer to the money upside call. Now remember, we can wake up one morning and the world could be over with, and it shoots right through that call. We're probably going to lose a little bit of money. But what do we have? A huge in-the-money 15 call with about a 0.8 delta, if not a little bit more. Let's take a look at where that is real quick, and then we'll wrap up by taking a look at the overall portfolio and how we're doing here. Where's that Jan 15 that we bought deep in the money again, folks? And we always talk about buying when we buy calls close to an 80 delta call. So delta's actually gone down a little bit on this one, but yeah, still a great trade. Getting that thing for about 530 in your virtual paper trading account. Sell some front month upside calls. Maybe, if you haven't gotten in this trade in your virtual account yet, you could, sell something with a little more premium, those 21s or 22s for about 41 cents. And we did it 15 contracts in the model portfolio. So, folks, that's a quick review of how we're looking in the primary trade alert portfolio now that I've taken it over. If you're interested in taking this for a test flight, the Top Gun Options primary trade alert program or the advanced trade alert program, all you have to do is go to topgunoptions.com/advanced-alert. And let's see how our model portfolio is doing year to date. This is the member section of the website. You go to trade alerts. We see how we're doing on time here. Doing pretty good. Trade alerts, you click alerts, and on this page is every trade alert in chronological order. Like Doug in the advanced model portfolio put a straddle on Alcoa on. Great play on earnings. As earning approaches, implied volatility should be rising. Obviously not going to give that one away to folks who aren't current subscribers. There's our primary trade alert, the double bullish vertical on USO. How's our model portfolio doing? Here are Top Gun Options, the primary intermediate model portfolio. Not too bad. How we looking? Month to date, and what is it? March 24th, up 12%, or nearly $6,800 in our model portfolio. And year to date, 17%, or over $9,000, about $9,300. Not too shabby. Very happy with that performance. So hopefully that can continue. Obviously, past performance, no indication of future results. So, folks, I hope you have a great weekend. I'm getting ready to go out, hit the beach, do some surfing, take a break from the market. But it looks like everything's going pretty well in our primary model portfolio. If you have any questions, folks, or comments, or want to interact with me or Doug, make sure you jump in the ready room. And this is where you can ask any questions, or maybe ping some questions off your fellow traders. So that's all for me. I'll be back beginning of the week with a look ahead video, easy for me to say, and a couple more primary alerts for this week. And I'll see most of you in our live trade brief Tuesday morning. Matthew Buckley, call sign Wiz with Top Gun Options. Happy hunting. Make sure you hedge. Have a great weekend.